Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
I would suspect any day during this week, the executive order to reduce tariffs to 18% should be coming out.
This is the penal tariffs of 25, which US had imposed, and that's gone.
India business, their revenue was up 15%. Margin is coming above 11%. It was at 11.3%.
25,830 on the Nifty. It's about 100-odd point pop.
The signing of the deal in terms of immediate impact on earnings or economy is not that meaningful.
Almost everything seems to have rebounded when it comes to commodities, whether it's gold, silver, crude, copper, Bitcoin, everything is trading in the positive on Monday morning.
There are so many positives in terms of the trade deals, in terms of the budget announcements.
The broader markets are doing better than what the headline index is doing. That's always good news.
The street was prepared for a good performance, but the company's gone ahead and reported an even better set. 42% jump in the revenue is what the company has reported.
Exports to the US are around 20% of the total exports, which are valued around $6 billion. So obviously it comes in as a positive for them as well.
These gains are obviously led by SBI, who reported strong set of numbers, but we saw Indian Bank and Bank of India also supporting these gains.
A lot of data that the markets are analyzing, but of course the big one is some more granular details that we are getting around the US-India trade deal.
The US trade deal is positive for India, positive for the sentiments in India, and hence indirectly positive for tariff.
Okay, well, that is the day so far, and it is a good-looking day with strong gains. Nifty, Nifty Bank, mid-cap index, small-cap index, and State Bank of India adding almost 1 lakh crores in market capitalization in a single day. I mean, I think you've got to go back some time to have a day like an 8% day on the country's largest bank. This is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Rima and Nigel with me. Guys, hi afternoon.
Hi, SBI at a life high, and now the market capitalization, after adding 1 lakh crore, has crossed that 10 lakh crore mark. But it's a good day for the benchmark indices. The Nifty and the sensex holding on to gains of close to about 0.5, 0.6%. Yep. The Nifty is above 25,850, but a much better day for the mid-cap index. Nigel, mid-cap index inching towards a 1,000-point rally, and the advanced decline ratio, well, today 2,400 stocks in the green.
Well, in line of order, right? The Nifty is doing well, the mid-cap index is doing better, and what's doing best is the small-cap index. That index, in fact, is up close to around 2%, so your portfolio will be feeling absolutely beautiful. And a lot of stocks actually are doing very, very well. The breadth of the market is good. Those lines don't want to kiss each other. They're far away from each other, advanced decline ratio. And plenty of beaten down names also are bouncing back. You have a Sun TV that's higher in trade today. You have, Ganesha Ecosphere, large mutual fund holding. That stock, I think, is up 15-18% or thereabouts. So plenty of names doing well. It's a good feeling, I think, after a while. Sun TV now at the day's high. I think that RCB's sellout is going to be something that the street is tracking very closely.
Absolutely. And there's a big one in terms of if you just look at the sum of the parts for Sun TV, that is, and we'll put some of those numbers out a little later. But let me just quickly run you through the interactions which are lined up here. So, of course, market looking good. I mean, it was basically two things when we came in this morning. There was the India-US joint statement. And, of course, there was US markets which had rebounded. And, across the board, there's cheer. Small caps, by the way, the small cap index in the last 5 days is up about 1,500 points. And, of course, I mean, that is also the space which got hammered the most. So it's green across. PSU banks, the index is up 3.5%, and that's all thanks largely to SBI's 8% rip-roaring rally today. Tata Steel and, is the other one. We'll, by the way, get you excerpts of our interaction with both companies in just a bit from now. Lots of export-oriented names, right? I mean, seeing some green on the back of this agreement to cut tariffs on Indian exports down to 18% between India and the US. So a little bit of deep dive there coming through in just a bit from now. How should you position yourself is the question. Mitesh is with us with the answer. Mitesh, good afternoon. Good to have you here. What would you recommend?
Good afternoon, Prashant. In the morning, the view was that buy on infrared dip. We got a kind of 100-point dip from the opening levels, and that was a good buying opportunity for some Indians have positions. Now I think the idea is that maintain your long positions. 950, 26,000 is my first target area. And I think beyond that, good chance that we might even look at a retest of 26,300 zones or thereabouts. So in that sense, I think, just stay put. On the stock side, I have a buy on Indian Hotels and Grasim. So Indian Hotels is a buy with a stop at about 687 for targets of around 720. Grasim is a buy as well. It's breaking above its previous highs. Some good price volume action today. That's a buy with a stop below 2,900 for targets of around 3,000.
Thank you very much for that. PSU banks leading from the front. The Nifty PSU banking index will come up for you on your screen with SBI right on top. And today, HDFC Bank is sulking. HDFC Bank is down close to about 0.5%. Despite that, aided by the strength in PSU banks, which is up 3.5% at the index level, we've got the Nifty Bank up more than 500 points. Gaurav joins in for a complete wrap of how the PSU banking earnings fared this time, the valuations. Gaurav, over to you.
Well, yes, if you look at the PSU Banks Index, it is up more than 3%, and the biggest push that the PSU Banks Index saw was from SBI, and the reason being that very good set of number from the biggest bank of India, because if you look at the loan book growth, 15.5% is what the bank has delivered. Apart from that, they have also upped the guidance from 12 to 14% to 13 to 15% in terms of loan book growth in this year itself. When it comes to asset quality, the net NPAs are actually at a lowest level in the last 20 years, and at the same time, profit increased almost by 25% on a year-on-year basis in this quarter itself. But other than that, if you look at the PSU Banks Index, it also had its share of gains and falls throughout the third quarter. Because if you look at some of the gainers, in this quarter itself, we saw banks like Bank of India actually surprising positively in terms of net interest margins with 16 basis points of gains. Indian Bank and Union Bank, both of these banks actually reported good set of number, and that is the reason why if you look at ROAs for both the banks, we saw expansion, which was actually a bit of a positive surprise for the street. But on the flip side, we saw banks like PNB, which is Punjab National Bank, reporting net interest margins decline, which was actually a negative surprise. And at the same time, same thing happened in Canara Bank as well, where street was expecting flattish margins, but bank actually reported decline in the margins, and we saw some reaction on the banks as well. But about that, going ahead, there is another trigger which is coming up, not only for the PSU banks, but for the entire banking segment. But this is going to be a bit more positive for PSUs. And that is the DICGC insurance premium. Earlier, it was a flat premium of 12 paisas per 100 rupees of deposit that the bank used to pay. But now RBI has said that there will be 4 classes for banks, which will be A, B, C and D. And the deposit and the insurance premium will be based on the class. So suppose if the bank comes in the A category, bank will pay just 8 paisas of premium versus 12 paisa. And at the same time, there is also another discount for vintage banks, which is going to be another 25%. Now, brokerages believe that it can actually boost the profit almost by 1 to 2% and boost the ROAs almost by 4 basis points for the banks. And it is going to be more beneficial for the PSU banks, because as a percentage of OPEX, this constitutes a larger amount for PSU banks. And all in all, despite all the tailwinds, even if you look at the valuation, so let's take an example, SBI for an instance. If you look at the valuation of SBI, it trades at 1.7 to 1.8 times price to book. But if you compare it with the large private sector banks, it is still at a discount. For an instance, ICICI Bank still trades at 2.7 times. So SBI still trades at a discount, and not just SBI, other PSU banks as well have been trading at a discount to private sector banks. So there is another room for growth in terms of valuation. If you look at the tailwinds, they suggest that the growth is likely to sustain. And at the same time, there is going to be another tailwind in terms of insurance premium from the recent RBI announcement as well. So all in all, PSU banks are poised to be at a growth lever at this moment, is what we can say from this current announcement.
Got it, Gaurav. And as you summed it up in the morning, out of the stadium, smashed it. And that it appears to be the case. Stock holding strong. Well, in fact, the SBI chairman told CNBC-TV18 that the lender now eyes FY26 credit growth to be between 13 to around 15% in comparison to 12 to 14% earlier. Let's hear him out.
The credit growth has come across the sectors. Every business segment has contributed. In fact, the corporate also had rebounded almost 13% corporate credit growth. And across RAM segment, every segment of RAM has contributed double-digit growth. In terms of the guidance, yes, we are upping the guidance from 12 to 14 to 13 to 15% for the current financial year on an aggregate basis. I don't want to go beyond the current quarter. I think we need to look at, there are so many positives in terms of the trade deals, in terms of the budget announcements. in terms of the monetary policy related announcements. I think everywhere I see a greater opportunity for State Bank of India. I think we are sticking to the NIM of about 3%. For the current, the full year NIM would be around about 3%. And on the credit costs, I think our earlier guidance was 50 basis points. We are still sticking to it. There are not going to be any surprises on the asset quality side.
All right, let's get in our expert for the day. We have Sudeep Bandyopadhyay who joins us on the show. Hi, Sudeep. The big boy is standing up and getting counted. SBI, it opened with good gains and doesn't want to give any of it up. What's your pick of the pack?
Well, definitely SBI, Nigel. I've been recommending SBI for last almost 1 year. And, I was looking at the valuation gap which existed between the private sector peers and, SBI and some other PSU banks. The performance had been improving and we were reasonably confident that the credit growth is going to come. And that's exactly what has played out. Credit growth is definitely strong. The management body language itself is indicating that they're expecting even better credit growth. That's why they upped the guidance. I think, of course, the asset quality goes without saying. Fantastic asset quality, which is probably the best in many, many years. I think 20 years or something, I think, was being mentioned. So I think all cylinders they are firing. There are some IPOs of subsidiary companies which are being lined up. And that also should be good news for SBI because value unlocking will definitely happen. The subsidiaries, in any case, are performing very well. And on top of everything, DICGC reducing the insurance premium. And of course, SBI will be a big beneficiary of that. Definitely will improve the financial numbers even better going forward. So I think, and remember the valuation gap even now exists. If you look at in Kotak Bank, it quotes around close to 3-time book, whereas SBI is 1.7-time book. So while I'm not saying they should be the same, considering the kind of growth levers which Kotak Bank is creating, and SBI being SBI, it's a very large organization. The momentum may not be as much as Kotak, but the fact remains the valuation gap is still glaring, and some amount of bridging will definitely happen to bring it closer. So even at current level, I think SBI definitely does look good from a long-term investor's perspective.
I just, Sudeep, I just want to mention the IEX stock as well. If you can just quickly pull that up. There was a flash at the bottom of the screen and, the graphics are also with us. I'll tell you the sum and substance of what it... So basically CERC. CERC is on one side and IEX is on the other side. Both have been fighting. CERC wants to implement market coupling and IEX, of course, has been opposing it. The case is in the appellate tribunal and now CERC has filed its final affidavit with the appellate tribunal. And what it is saying is, it's saying that this is not an order. We've not passed a market coupling order, but this is just broadly directions towards market coupling, which we will want to do. So how can IEX appeal against directions? You can appeal at the appellate level against an order, but we've not passed an order. And this is something, when the case was going on and we were sort of reporting on hearings, etc., this is something which came through in the last 2 hearings as well. And this is what find its place in the affidavit which CERC has filed with the appellate tribunal. So, and that other line, right, that, they're calling IEX a monopoly and look at that quote, right, preserve entrenched market dominance. And they're saying that, well, the plea is not maintainable because we've not passed an order. This, of course, itself is a little strange because if you remember, the coupling was supposed to be implemented in phased manner starting January. So now, of course, CERC is telling the court, the tribunal, that, well, this is a direction, but they're not saying that we are pulling away from market coupling. I don't know. I mean, the stock is going up a little bit, but they're very much saying that this is a process towards market coupling, which we want to do. So I just want to make that clear. This is, I don't know, I'm not sure if the market's reading this as relief, but it doesn't look like relief. We heard from government officials as well that they're fully behind market coupling as a concept. And I think the affidavit, also some of the details which you're putting out, point to in that direction. So that's the IEX market coupling case which is going on. Rima.
Well, the other big story today is that India and US have entered into a framework for an interim deal, and that provides a lot of relief for export companies. Some of them are doing very well today. Vinny joins in to just quickly recap the news and the impact. Vinny.
Hi, absolutely. So India-US trade deal, a lot of these exporters will start seeing the benefit coming in. First, let's talk about the textile sector. In that, Gokuldas exports, Welspun Living, Indo-County Industries, all of them have an exposure of around 60 to 70% in the US markets. And all the textile companies had seen an impact coming in on the margins because of the India-US trade deal where they were paying 50% tariff. Now, obviously, if that effective rate comes down to 18%, margins will start seeing an improvement there. So that is a benefit there. Other than that, Indo-County Industries, Pearl Global, Alvin Limited, KPR Mill, all of them also have exposure in the US market. Another sector that will start seeing some benefit is going to be the chemical space. SRF, PI Industries, Aarti Industries, keep an eye out on some of these names because Indian chemicals exports to the US, 20% of the total exports were valued, which is valued at around $6 billion, is what it accounted for. Now, obviously, this deal will help in terms of improving volumes for these chemical companies. Auto sector and auto ancillary names as well, they will be in focus. Why? And they are in focus because India will get exemption under Section 232. So Tata Motors, that is in focus. Why? 33% of JLR's volume comes from the US market. Sona BLW, around 40% of the total revenue exposure is from US. Bharat Forge has an exposure of around 38% to the North American markets, as well as Balkrishna Industries and Eicher Motors also has some bit of a US exposure. Seafood companies, so whether you talk of Avanti Feed, Apex Frozen, Coastal Corp, Waterbase, all these are in focus. Why? Because US is a very important market for India in terms of frozen shrimp, and that's a big portion that comes in terms of the export there as well. So that is why all these companies also will see some bit of an up move or some positive signs going forward from here on. Lastly, solar stocks like Wari Energies, we have Vakram Solar, ME Photovoltaic, all of that also have exposure in the US markets, and that is why they are in focus.
Thank you very much for that. KPR Mill, though, is not participating in the upside. It's got a modest gain of about 0.5%. Vari Engineering, too, is just up nearly 1%. So it's underperforming some of the other peers. Export-oriented stocks doing well. But let's listen in to the Commerce Minister Piyush Goyal on when the new tariffs would come into effect and also how the deal protected India's sensitive agricultural sector. Listen in.
I would suspect any day during this week, the executive order to reduce tariffs to 18% should be coming out. It would require a signing by the Honorable President of the United States of America. But now having entered into the framework agreement and all terms being finalized, I see no difficulty in that. There are many goods which will get zero duty tariff. Some are already going at zero duty, some more will come at zero duty. In the aggregate, my sense is about half the exports will become zero duty, zero reciprocal duty in terms of tariffs. 10 or 15% would probably be sectoral tariffs, which for steel, aluminium and products and derivatives of that, in some cases could be as high as 50%. But then they'll have to look at how much is the steel or aluminium content, and accordingly it will be a calibrated or a calculated import duty as a Section 232 tariff, not as a reciprocal tariff. Everything else will be at 18%. Right. All the areas of mass production where we are self-sufficient and which really the larger part of farmers are producing, like meat, poultry, all dairy items, rice, wheat, sugar, all types of GM products, are not covered under this agreement. They have been excluded, and the farmers are completely protected from any sort of imports with the high import duties that we impose on them. So I really think the farmers have nothing to worry. It is a few political vested interests or naysayers who are misguiding them. And I would like to appeal to all farmers and farmer organizations to carefully assess, and they will find that our farmers are fully protected.
Sudeep, you want to comment on any of these export beneficiaries? Which one do you like right now? Because stocks like Gokuldas, for instance, have already seen a rebound.
Well, I think you're absolutely right, Rima. Most of these stocks have already run up quite a bit. So I don't think I will recommend entering these stocks at this stage. But definitely they're going to benefit. I would rather recommend looking at some of the chemical, agrochemical, and specialty chemical stocks. Most of these companies also have significant exports to US, anywhere between 25 to 50%. And they also do benefit. Otherwise, also the business environment for these companies have been improving in the recent past. So this is one space which I would definitely recommend buying into at this stage. So an UPL, considering that they're the fifth largest agrochemical company in the world, and the potential remains significantly unexplored yet. Aarti Industries and many other companies in this space will benefit because of this transaction. The deal actually and definitely deserves to be looked in again at this stage.
Aarti Industries. What about PFC REC? We got the news over the weekend that the board has given that in-principle approval for a merger between PFC REC. The first call came in, by the finance minister in the budget. Stocks are under pressure. REC more so, down 3.5. PFC too is not reacting positively to the news. So what's the overhang on PFC, say?
Well, I think what's been happening is power sector companies haven't really given any kind of satisfactory returns to the investors over the last 1 year. But structurally, they do look good for the next for 5 to 10 years. I think there are a lot of things happening in the Indian power sector. Things are improving definitely, and there are efforts to improve them even further. I strongly believe that power financiers should do well in the long term. And look, the kind of capacity which is being proposed to be set up, whether by NTPC, Adani, or the Tata Power, is humongous. And that power setting up of capacity cannot be funded by the commercial banks, and the specialized power financiers will have a significant role to play. So the merger is a step in the right direction. No point having multiple entities doing pretty much the same thing. There definitely is a good step. Let's watch how the merger process pans out. But I'm strongly positive on both the power financiers, and now that they will be merging, I think I will be positive on the merged company. But if I have to pick up between the two, pending the merger, I will go for PFC, and I'm expecting better result by buying PFC at this stage.
Got it. Okay. All right, Sudeep. Thanks a lot for joining in and giving us your take on a couple of those names. Have a good remainder of the day. Well, the market's holding strong. I'll tell you what. Slip into a short break. We have Amit Gupta of Motilal Oswal Private Wealth, who's waiting for us on the other side. Stay tuned.
Nigel's moved over to the big wall to get us all the trends in the futures and options space. Nigel.
It's a beautiful looking screen, Rima. It's not just the Nifty. The bigger outperformance actually has come in from the mid-cap and the small-cap indices, and that's what's going to make portfolios feel good. So just take a look at that. Lovely. Ascending trend is what you're seeing out there. Well, in terms of the Nifty as well as the Nifty Bank, which is the headline indices, as I mentioned on Friday as well, when we went very close to test the 20-day MA, that's the first reference point on the downside. And until that's protected, you'll have to fancy your chances that this market actually wants to go ahead and test higher levels. So 25,400 on the Nifty, 59,500 on the Nifty Bank. The PCR, a few sessions ago, it was at around 0.8. It's now moved to around 1.06, which is still very much in the middle. The range is 0.6 to around 1.6. It is at 1.06, so that's in the middle. Par for the course, one would say. The put writers, they're having a blast. Remember, these options, they expire tomorrow. So 25,800 put, the premium's down by a third, from around 180 to around 50. 25,850 put. The premium was at around 215 at the start of today. The last time I checked, that's come down to around 70. And there is some optimism creeping into the market. What if you get a good handover overnight? What if you get a couple of super earning results as well? Then, in fact, there is some out-of-the-money call buying as well. So the premium on that one has moved from the 26,000 call from around 30 rupees. It had moved to around 48 rupees. That as well is holding now at around 23 rupees or thereabouts. So that's an important strike. Some out-of-the-money call buying. All you lose is 22 rupees or thereabouts. Stock futures. Interesting trends out there. SAIL could be a stock that's actually possibly making its way into the F&O ban. May not be today, but I think in the next couple of trading sessions, because it's very, very close to moving into the Refno band. And a couple of those stocks that got hit last week, they have come in for a short squeeze. Cairns, big move on the upside, open interest lower, as is the case with Hindustan Zinc. But it's a feel-good session. The Nifty doing well, the short scampering for cover, and let's see what the flows are by the end of today. But otherwise, the broader market participation is something that's making your portfolio feel very, very good.
Absolutely. Nigel, thanks very much for that. Amit Gupta is Head of Equities, PMS, Motilal Oswal Private Wealth. Amit, good afternoon. Good to have you with us here on the program. I mean, the small cap index is where some of the action is concentrated, I guess, because it also fell the most, has seen the most amount of damage. The Nifty has been a few percentage points away from its all-time highs. Not so much with the small cap space. What's your view specifically there in that segment, in that part of the market, Amit? Have you seen a durable turn?
Yeah, so I think the clouds are getting over. So last few quarters, we had seen, not very great earnings from the small cap category. In fact, it was struggling to come in positive. And we were seeing some good earnings that time actually in the quality, some high quality mid cap stocks. But small caps in a very emerging themes, I think this is a time to look at. Because it is not only the US deal, though the US deal was much heavier on the sentiment. Once it is over and in between, government has done some other deals also, or on the verge of getting those deals, the GCC, the Canada, and previously Oman and New Zealand already done. So I think it's a double positive, which I was discussing before, that once, because we were discussing with one of the company that how they are managing this particular problem in US right now. So they said that in the non-US tariff revenues, they are trying to increase their margins. So the companies have worked upon this particular tough phase to better the margins in the non-US areas, and which is, I think, a more positive, because once this US market is opened and the other markets simultaneously are going to be opened, then I think from the volume perspective and from the margin perspective, it is going to be better. Now, the next thing is the capacity addition, because I think the demand is going to surge, and that is where you have to expand your capacities. And that we will see in certain areas now wherever the high growth sectors are present. So we feel the electronics is one of the segment in that area, possibly textiles, which was badly hit. I think this is one space where stocks have participated, but still there are stocks which can still participate going forward.
So are you looking to aggressively invest right now, Amit, in areas like textiles, electronics? And how much of the money that you're getting right now would you invest in small caps versus the large cap? Yeah.
So we are doing this. See, initially, the companies which were badly hit, they had seen a sharp reaction on the higher side, but still there are companies like KPR Mill which are available. If you look at the return on equity in the last few years, they used to give 19-20% of return on equity. Pearl Global, which used to give 20% of return on equity in such a high capital intensive space. So we feel that throws an opportunity. In fact, some yarn manufacturers or fabric players like Vardhaman Textile, where you have an excellent management, and they are also going to see the surge of, I think, the volumes going forward, and which was there subdued for quite some time. And I think that this is where there is a room. There is a room in this particular space. When rupee USD INR is still around 90, at least a few quarters now on an immediate basis, they can feel a comfort. And going forward, there was a lot of fear that the customers can go away. And I think that fear also is going off. So many stocks are there which are much far away from the 52-week highs. I think there is a lot of space in those stocks.
Yeah, lots of space in those stocks. Let's just look at Gokuldas. Gokuldas is up 8% now. Yeah. It's not at the day's high still, 850. Actually, it got to 850 today, which means, I mean, basically it's, the high on Friday was about, not Friday, actually Thursday was about 844. And then Thursday it ended lower. Friday it sold off a little bit more, but it's basically making up for all of it as it comes back very, very strongly right now. Amit, any other names, especially in this aerospace, defense, but aerospace mostly, not like other defense, but aviation. There's this new company which came to the market, ACUS. I'm not sure if you saw it. I mean, they basically make, aircraft parts largely for commercial aviation. They got some defense business as well, or anything like that in the forging space, or have you looked at that space?
Yeah, so defense and aerospace, there are certain companies which are present in both of these segments. You can take an example of MTAR technology, right? So likewise, there are stocks which we feel that they will garner a good amount of orders. So, and almost 200, if airplanes are required now, and almost, I think, $300 million is required for each plane. So you can expect 65 billion dollars of orders actually going to be given. And this is where these companies definitely are going to be benefited. So I think, yes, a lot of bottom up is required now, considering that most of the defense stocks also are down. We have not seen, despite 17.5% of capex increase in the budget, we have not seen that kind of euphoria coming back in the defense space. And coupling with the aerospace, I think it's definitely positive. L&T, for example, L&T is also moving into space. And L&T is also the beneficiary of nuclear energy, because government says that data centers, yes, thermal power is there, and the next one may be nuclear, and L&T is expanding into that area. So I think this is one large cap which is very beautifully placed, considering the valuations also. And recently it had declined because we had seen one of the order in the Middle East, it was not accepted. So it has seen that phase and now coming back. And this is where we feel the Nifty will get support from these large caps, which are very attractively valued also, because they have spent couple of years doing nothing.
All right, final question. What about real estate? There's been a big sale on out there, not in terms of home prices, but stock prices. Some of them down 30, 40, 50%, or even more. Do you think that since, on-ground fundamentals are pretty okay, but the stock prices have come down, are they providing a good entry opportunity? Stocks like Godrej Properties, for example, are up close to 6% and holding strong.
So this recovery is definitely because they have fallen significantly. There was a lull period when the broader capital market also was not doing good. When the portfolios do well, then the wealth is created and the people actually look for more expenditure into the luxury homes. That was slowly, we felt that it was missing, and it can come back. It may take some time from the residential space, but the commercial is booming. We feel REITs, if you look at, they have done really well because they are linked to the commercial areas. GCCs are expanding, almost 1,600 GCCs we have in India, and it is going to increase further. I think the commercial real estate is definitely doing well, and that's why REITs we preferred for some time. But now the valuation, because interest rates, after the interest rate cuts, we feel that real estate is at a better price. But residential is more skewed towards luxury, and that's why you have to be very selective in that area.
All right. Amit, thanks very much for that. I really appreciate your time here, and interesting conversation as always. I mean, we could go on, bunch more questions, but I guess we'll leave it for the next time. Kalyan is up 15% now. I just want to make a quick mention. I mean, I think it got to about 440, 442. I think there is a strong element of covering, which is very much evident. So it's a mix. It's strong numbers. There's short covering in the stock, and I think the data later today will tell us what kind of positions have moved. And Nimesh also has some details on this one a little later. There's also some other chatter, but that'll find its place in the chatter list which Nimesh puts out. Well, I think the Pharma is in focus, right? Speaking with CNBC-TV18, Sun Pharma's Dilip Shangvi and Lupin's Vinita Gupta emphasized on the need for Indian companies to ramp up innovation, research and development, and also elaborated on how Indian pharma companies could acquire these capabilities. Take a listen.
It's not a option, it's a necessity, because I think if we look at Indian companies, and we have 60% of the global generics and branded generics market. So from this to grow and to achieve consistent both top line and bottom line growth is a big challenge. However, if you look at overall size of the global innovative product market, then it's almost 85% of the pharma market. And that is a business that we have no presence in, or very limited presence in. And we will have to find multiple solutions, including solutions where we may have to buy a company outside which has innovation as a part of its core, maybe create infrastructure outside, but also work with regulators in India.
India today, 97% of the market is off-patent brands. It's 3% of the market that's proprietary products. We have seen drugs being developed for tens of millions of dollars. We have seen drugs being developed for hundreds of millions of dollars. It doesn't need billions of dollars. There's a tremendous opportunity for Indian pharma to innovate. And the next decade, really, there's an opportunity for us to really establish a credible start of making India a hub for innovation. We can really leverage the India advantage, the population that we have, the patients that we can recruit into trials, the incentives that the government is putting forward, the regulatory pathways, accelerated pathways that the government is putting in place.
Welcome back. You're tuned into Closing Bell. It appears it's one of those days where we're going to be ending at the high point of the day. So things looking good. Good time to go to D-Street Chatter. Nimesh joins in to tell us what is he picking up. Nimesh, the dealing rooms will be feeling much better. What are the flows like?
The flows are positive, Nigel. And I've been saying this for a while now that the flows are positive and largely shifted from large caps to mid caps and small caps, and that's exactly the way it's panned out today. Today is a combination of rally led by the financials and a bit of short covering in the beaten down sectors like real estate. There is a bit of there is a small MOC buying as well. So I will look for the institutional data very closely by the end of close, but looks like it could be a positive number, especially from the FIs today. The PSU bank is where the big momentum seems to be thanks to SBI. The index is up 3% and it's actually lifted the entire PSU bank basket as well in today's market. So a big momentum there. And as I've been saying, the small cap index and the micro cap index are up another 2.5% today. And a lot of stocks are seeing 5%, 10%, 15% upsides as well. So clearly the momentum seems to be shifting towards the broader market names. But I guess today rally seems to be helping not only from short covering, but a bit of buying as well from larger FIs.
Okay, all right. What about individual stocks, Nimesh? You've got an interesting list.
Well, the first name is Kalyan Jewellers. It's been widely discussed in the by the anchors as well, but even in the dealing room. So a big up move. Large part of the rally is also because of the short covering. But I understand some large HNIs have bought as well after the gap up opening in today morning. So good volumes, not only in the futures market, but in the cash market as well, and backed by some HNI buying. The second name is Tata Steel, big move on that name as well, and backed by big buying as well. So large volumes, and I understand one large long-only fund has been an aggressive buyer in Tata Steel in today's market. So that's the second name. The third name is GNA Axle, a bit soft in today's market, been consolidating off late, but I understand the softness could be because there is an anticipation that could be a large block in GNA Axle very soon. And the last couple of names where there is very strong delivery-based buying today, Vedanta as well as IDFC First Bank, both stands out in terms of aggressive buying. So watch out for delivery stats. My sense is there will be aggressive delivery-based buying in both these names, Vedanta as well as in IDFC First Bank.
Yeah, no, absolutely. Interesting stuff there always, Nimesh. On Kalyan, Nimesh, this is fresh buying, some covering. I mean, what are you hearing?
No. So Prashant, clearly the large part of the rally is short covering.
Yeah.
But I understand there is a bit of buying as well from larger HNI. So even before the results, I was discussing a bit of numbers with Mangalam as well. And if you look at the stock price fall, we are only looking at today's up move of 15%. But the stock is actually half from the highs. And Mangalam had a very interesting data to share. Kalyan Jewellers, the all-time discount to Titan was almost 24%. Now the discount was almost 60%. So clearly there was a big disparity between the valuations of Titan and Kalyan. Of course, it's not a peer comparison, but given that, the discount had narrowed so much and the results were good, the street was short, it led to a bit of a short covering rally. And also, I understand some larger HNIs have bought in today's market. So that also helped in terms of cash volumes as well.
Anything new on Idea, Nimish? Apart from that creeping, of course, that you highlighted?
Not really, Prashant. That was part of it. I was anticipating that disclosures will come. It has come. But again, I guess it's not that large. The street was anticipating a very large number as far as the creeping from the promoters. The disclosures would have come is just 40-45 crores of buying that they've done. So looks like it's sentiment positive. But again, don't just watch out for Indus Tower as well. That will have a big rub-off on Indus Tower as well. We've seen a bit of rally in today's market in Indus Tower as well. So not only Vodafone is doing good, but that's having a bit of rub-off on Indus as well.
Yeah. Nimish, thank you. And that is the chatter for today. Well, Mitesh is with us with what he'd want you to do as we count down into the close, which is about 17 minutes away. Mitesh, tell us, what's on the list?
I had Indus Tower on my list as well. I think very strong price and volume action, along with the fact that the stock is making a fresh swing high. So good strength here. BTST with the stop at about 452 for targets of 465. Maybe a one-day call, actually. The other one is Keynes Technology. I think it's a stock which is reversing after a good decline. BTST here with the stop at 39.24 for targets of around 4,000 plus.
Okay, thank you very much for that. Some earnings reaction. PN Gadgil's Q3 numbers look very strong. The bottom line of the company has doubled. The stock is up 6.5%, but it's moving in step with the rest of the jewelry companies, which are all up. But PN Gadgil getting a step up. Margins for the company came in at 7.5% versus 5%. Bottom line 99% increase, and the top line too 36% up. Bajaj Electrical, on the other hand, has had a disappointing quarter. The company's reported a net loss this time of 34 crore. Stock is under pressure. But the life insurance data for the month of January is out. Yash joins it with the numbers.
Well, Rima, the entire year it's been sort of a tussle between two companies, that is Axis Max Life and SBI Life, in terms of who posts stronger numbers. The year started with Axis doing better. Then for the next few months, it was SBI Life, and seems like it's again Axis Max Life's turn to post better numbers. It's the strongest growth in the month of January amongst all life insurance companies. And importantly, that strong growth comes on a very strong base. So Axis Max Life growing its new business premium by 24%, the total APE growing at about 28%, retail APE again growing at 29%. Canara HSBC Life Insurance, a new business premium up 20%, total APE up 12%, retail APE up 12%. HDFC Life new business premium down by about 3%, total APE down by about 6%, retail APE contracting by about 7%. ICICI Prudential Life new business premium up 12%, total APE up 11%, retail APE up 9%. Finally, SBI Life, the company has taken a back seat, after posting back-to-back strong months. This time around in the month of January, SBI Life new business premium growing at just about 8%, total APE by about 3%, and retail APE growing by about 3% again.
Thanks very much, Yash, for that. So that is the insurance, life insurance numbers coming through. Well, a number of stocks, of course, moving in reaction to the third quarter numbers, which have come through post-close yesterday and over the weekend, and of course this today, during the day as well. Upasana is here with a quick snapshot. Upasana, take it away.
Well, first up, let me start with Shipping Corp. There has been an exceptional growth in the bottom line of the company, led by the tanker segment. Revenue has seen an uptick of 22% on a one-year basis and 20% sequentially. EBITDA margins stood at 42% versus 27% on a one-year basis. And PAT, as mentioned earlier, has seen an uptick of as high as 4.3 times at 405 crore. Next up is Kalyan Jewellers. The stock remained in focus today throughout the day. Strong set of numbers here. Revenue has seen an uptick of 42%, margins up 140 basis points at 7.3%, and PAT has also seen an uptick of 90% on one-year basis. Next up is JK Tyres. Healthy set of numbers. Earnings see a big improvement from a low base on a one-year basis. Revenue has seen an uptick of 15%, EBITDA up 81%, and margins healthy at 13.5% versus 8.6%. Next up is Crompton, largely in-line set of numbers, but company's ECD performance is better than what the street was estimating. Revenue has seen an uptick of 7%, EBITDA margins down 50 basis points, but largely in line with poll of 8.9%, and PAT has seen a downtick of 10%. Next up is Sun TV. The company's reported 47% growth in other expenses, which hurts the overall profitability of the company. Hence, the net profit is down 11%, while the revenue is up 4%, and margins stood at 48.7 versus 53.7% on a one-year basis. So certainly margins under pressure. But Elara has maintained a buy rating with a target price of 700 per share. It says that it values the IPL business of the company at the upper end, that is at 8,550 crores. Next up is Zydus Life Sciences. Overall, the result is above our poll. The net profit up 2%. Revenue has seen a healthy growth of 31% on one-year basis, and margins at 26.5 versus a poll of 24% on a one-year basis. So all in all, we are tracking all these stocks in today's trading session.
Thank you very much for that. Let me add two more. One is Indostar, stock up 6-7%. Good set of numbers. And on the flip side, Seagull India is selling off after the company reports no growth in the bottom line. So that is a bit disappointing. Amrish Baliga is now joining in for the last leg of the show. Amrish, thank you very much for joining in. What's the stock that you like today?
Good afternoon, Rima. The stock which I like is Himadri Specialty Chemicals, a leading integrated carbon and specialty chemical manufacturers, Kolkata-based, and they have the complete carbon value chain from coal tar distillation to downstream products offering in carbon black, liquid coal tar pitch, as well as specialty oils, cater to diverse industries like tires, aluminum, infra, electronics, and pharma. And in the last 10 years, they have shifted their focus from bulk industrial products to high margin value-added products. And they have 60 grades of specialty carbon blacks. And now they are building India's first large-scale lithium iron phosphate cathode active material plant, which is called LFP, a key material in lithium ion battery supply chain. And they have strong presence in export markets with products sold in about 45 countries. So this US-India trade treaty also is positive for them. Recently, they took over the erstwhile Birla Tyres and relaunched the products under the same Birla Tyres name. And this should start contributing to the bottom line from FY28 onwards. And they have made the strategic investments in EV battery value chain, which is synergistic with their current line of business. So the next 2 years, I think we should see a number of new production units as well as new products being launched. So quite a few triggers lined up. If you look at the Q3 earnings, they're quite good, 35% growth in PAT, Y-on-Y. EBITDA margins have improved to 22%, and the management is quite confident of doubling its profits by FY28 to about 1,100 crores. So I'm expecting an EPS for FY27 of rupees 18. With that, my target price is 630.
Thank you. We'll come back to you. For now, it's time for a short break. More on the markets when we return.
Welcome back. Well, just a few minutes to go before we wind down the trading session. We're still in conversation with Amrish Baliga. Amrish, any view on Shree Cements? We had a chat with Mr. Bangur earlier today. The numbers, the street is not getting confidence on that because the volume growth has continuously been missing what the industry has been growing at. Case in point being, in the last quarter, they grew by 1 to 2%. Industry grew at around 8 to 9%. Now, Mr. Bangur says things have turned around. They're looking at a balance between value as well as volume. And he's promising for a 5 to 8% growth in quarter 4. And the next year, 10% growth. It's a very high quality company and well run. What's your view on it?
But then the earnings have been disappointing for quarter. And despite the sort of assurances which come from the management, things haven't been moving. So I suppose people will wait for, things to improve. At least in black and white, the numbers need to be better than what it is right now. So only then I think the interest will come back. Till then, I think it will be in a narrow band. I'm not saying that the stock will fall from here, but for the investor interest to come back, we should see the numbers in black and white.
So no need to buy the stock and rush into it till you see some numbers. Got that. Any other names, Amrish, you like? Something like a Ganesha Ecosphere, the stock is up, I think, 15-18%. It's been a big underperformer. Massive mutual fund holding. Some of these recyclers, any of them you like?
No, the recyclers I've not really looked at very closely. But the other stock in cement, which I think I've recommended even like earlier also, is Birla Corp, which is the MP Birla Group company, expanding decently well over the next 2 to 3 years. I mean, they are expanding the capacity by 38%. So I think there are enough triggers for this stock to move up. In fact, I mean, I had a price target of about 1380 for this stock.
Any jewelry stock which catches your attention? There's Kalyan, there's PN Guardgill, there's Goldium, Sky Gold. Across the sector, big moves.
I think we've already seen a decent move in most of the stocks, again, because the way we have seen the gold prices moving up. But what I believe is most of, the profitability which we are seeing is more of inventory gains. And if you look at the real sales, I think that's taking a certain hit. And I think that's going to continue going ahead, because at least on the way up, there is some amount of FOMO as far as jewelry purchase is concerned. But when, when gold becomes so volatile, I think people may wait for a while longer, especially the discretionary purchases. I think that will slow down. So at this point of time, I will not really look to buy any of these, including Titan.
Thank you, Amrish, for joining in. We'll connect with you on Markets Forward. All right, we have some time. I think we can squeeze in one more question. SBI, that's the big mover. Can we buy right now?
Yeah, I mean, SBI as well as the PSU banks have been bullish for quite a while. And with the sort of earnings which we've been seeing quarter after quarter, even the latest quarter numbers were extremely good. We can still see some more upside as far as SBI is concerned. In fact, I'm looking at levels of about 1260 to 1280 for the stock, along with the other PSUs, because over the next, I think, 12 to 15 months, we should have that announcement of consolidation in the PSU market. It should be positive for all of them, especially the large 4-5 banks.
Got it. Okay, Amrish, thanks a lot for joining in and giving us those views. Wishing you a good remainder of the day, and we catch up rather soon. Well, just pull up a couple of stocks. I think Grow, the stock should come up for you on the screen. It's taken a bit of a leg down in the last few minutes, so that comes up for you on the screen. The other one is Tilaknagar Industries. That as well has taken a bit of a leg down, actually. Last few days, we saw some kind of buying. Now that stock has moved lower. But there are quite a few winners as well. SCI, the stock is locked upper circuit. You know, it was holding with gains of 15-16%. That's locked now in upper circuit. And a refiner like MRPL as well, that's holding with gain of around 4%. Remember, it corrected from around that 180 to around 150. Now it's making those highs yet again. So MRPL is still holding with a gain of around 4.5% or thereabouts. And NMDC as well has bounced back in trade today. So with just a minute to go for trade, let's wind things down. For the Nifty, well, we went home with good gains of around 170 points. There was green on the screen in today's trading session. SBI, Gaurav mentioned earlier today that the results were smashed out of the stadium. The stock smashed it. The stock ended high with a gain of around 8%. Shriram Finance, last few trading sessions, has been seeing some pressure. Well, that bounced back up 6%. Titan, the quarterly results update that has been good. Now, Street is waiting for results, which should be good as well. So some pre-buying out there, stock up close to around 3%. Grasim as well went home with some good gains. On the flip side, Max Healthcare was down 3%. Power Grid was down close to 100%. And ITC as well lost close to 100% in trade today.
Some large cap IT names also drifted lower. Infosys, Wipro ending in the red. Infosys down nearly 0.7%. And ICICI Bank, HDFC Bank, Axis Bank. So private sector banks under pressure, even as PSU banking index was perhaps the best sectoral gainer today.
Yeah, that's a bell which goes off, and I think we're done for the day. Actually, as I think Rima was talking about it earlier, if you just look at some of the broader market winners, it's a lot of these metal, mining, jewelers, that kind of stuff, right? Kalyan, Goldium, Vaibhav, Sky Gold, Thangamile, and of course the entire 5-6 listed ETFs and silver, they're all doing very, very well. Shipping Corporation, Transformers, Jana Small Finance Bank, Hubtown, Imfa was up sharply, Shelly Engineering was up about 11%, Kim's went up sharply on volumes, and so on and so forth. Certainly, volumes and price action on the side of what was up today. It's a wrap on this edition of Closing Bell. More coming up on Markets Forward in just a bit. Stay tuned.